One of the best things about the pandemic for us has been, we were a pretty close group in Austin, and we're sad that we don't see each other in person too much anymore. But now that we're virtual, we've really become like the all world investing group. And that's been so cool. Like Mel said, it is so awesome to have so many Investera folks joining from all over the world to come here and learn about investing. And that has really been, I think, an unintended benefit of us being able to go virtual during this time. So we do have a YouTube channel for those of you. We're going to record this. I think that message just pinged up. We're going to record this and put it on our YouTube channel. You can go there and see past meetings that we've had. And so go ahead and do that if you want to check us out and subscribe to the channel. You'll get updates whenever we post a new video. You can also join us on Facebook. We have a private Facebook group that I know Mel and Joy are both members of, and our kind of main home is on Meetup. So if you want to get invitations to future events, please join us there. We cover a lot of different topics. We talk about the stock market. We talk a lot about real estate. We'll talk about retirement accounts. And this is our very first foray into cryptocurrency and digital assets. It's been our #1 most requested topic. And when I met Joy and Mel about 2 years ago, I knew that they were our trusted source for information in the crypto space. And I am so delighted that they have offered to join our group and lead us through this discussion. My main concern in talking about such a new investing asset class is someone who's going to be truthful and trusted and tell it like it is. And so, these two women and their firm that they'll tell you more about are really kind of at the forefront of the digital asset and cryptocurrency space. So I'm so excited to have them here. Before I start, I just want to take a moment, like I do before every Austin Women's Investing Group meeting, and say nothing in this group is intended to be individualized investing advice. It's not legal advice. And so we're here to share our knowledge and expertise. But if you need personalized advice, please hire a financial advisor, an attorney, a CPA, or some other financial professional to help you with your specific questions. And so I think without further ado, I'm going to go ahead and turn it over to Joy and Mel to take us through their slide deck. One more thing, this is a little bit different from some of our other meetings. This is such a new topic for most people. Joy and Mel are going to go through their slide deck, and we're going to try to reserve most of our questions for after the slide deck. They're probably going to anticipate a lot of the questions you have, and then circle back around to them after they get through all their material. So without further ado, I'll turn it over.
Hello, everyone. Welcome. Thank you, Sarah, for the warm welcome. This event, collaborating together, we've been talking about this for a long time. So we're really excited that it's happening and to have people joining from all over the world. So I'm Joy. I'm here with my co-founder, Mel, and we'll share a little bit about ourselves and our background. So I'm really passionate about helping people reach their full potential through economic empowerment. My background is in financial inclusion. I worked in emerging markets in microfinance with low-income entrepreneurs for 10 years before I started building Investera. And I'm an investor, of course, myself. So right now, my time with Mel is spent on creating this place that we're going to tell you more about. Mel, you want to introduce yourself?
Hi, everyone. Mel here, and I have been nerding out and consulting in the crypto space for the past 8 years. My background is in business, entrepreneurship, and sustainability. I've been consulting in that space for over 15 years. And crypto has been a fascinating journey for me. It's changed my life. It's changed the way I see the world, my social networks, my professional opportunities. I'm really excited to share about it. And throughout that time, I've seen how hard it is for people to actually grasp what cryptocurrency is. It's a huge emerging space. It potentially might be one of the greatest transfers of wealth that we might witness, an innovation. And that's why I'm really excited to help people bridge into that world and really be a part of it, because I believe that if we might together be able to build a better future.
So what's Investera? We're an investment education community. We want to create experiences where you can learn about investing across all asset classes. And our specialty is really in digital assets like cryptocurrency. And I want to touch on cryptocurrency because that's what we're focused on today, and why we're so passionate about helping people get onboarded into it is Mel and I believe that it's playing a massive role in the paradigm shift that's happening right now. And we're seeing how the new money systems emerging, everything that we're doing today in terms of how we make money, do business, how we invest is changing. And we love the opportunity that crypto presents for more women to step into the space and help make it more diverse than the legacy money system, which, to be honest, was largely designed by and for men. So there's this opportunity now for us as investors, as leaders, to contribute. And we really want to help usher in like a new era of investing that's more diverse, values driven. Mel and I share, a passion for having a more sustainable future and investing as responsibly as possible. So we're really excited about the possibilities that crypto presents in that way. So a few guidelines today that we're going to cover so we can create a safe space. We want this to feel like a community. So if you're open to it, feel free to turn on your video and we can connect with you face to face. If not, that's okay. We do ask that you minimize distractions to create an optimal learning environment. So please mute your mics and get what you need, your water, and turn off notifications. And the most important thing is to stay curious, share your questions. If we don't get them to them now, we will at the end. And I want everyone to remember as you go through this content, there's a lot of content. And even though, this is shorter than our regular workshops, it's still a lot. And if there's points where you feel a little overwhelmed, that's okay and natural. Everyone started as a beginner at some point. Warren Buffett did, Elon Musk did, all of us leading this call did. So we were there at one point, and what helps sometimes is to go revisit the content. And as Sarah alluded to, this will be recorded, so you can go back and rewatch this. But our job is to make this as relatable and accessible as possible. So if there is something you didn't quite grasp during Q&A, bring it up and we'll break it down for you. And before we dive in, we do have to make the disclaimer that we are an education service. We are not investment advisors. So by no means is anything that we share in this a recommendation to buy or sell. You digest the content here, and any decisions you make from here are your own. And we're excited to jump in with you.
All right, so to kick us off, we want to know more about you. So we created a couple of things that we would love to have your input on. And first off, we would love to know who's in the room. So in terms of your investor profile, we want to know, what's your level of experience? What have you invested in? I know like a big part of this is Austin Women's Investing Group. So, there's probably a good mix of beginners and some more intermediate and more advanced. So if you could fill out the poll that's on the screen right now. We've got responses coming in, and we'll share that in a minute once we're in. So if you could answer that poll, if you're able to, we'd love it. What kind of investor are you? I haven't started investing, but I'm curious. I have some traditional investments like in the stock markets and bonds. I have traditional and crypto, or I'm only crypto. Bold, bold. So we got 59 people out of 72 answered. We're going to close the poll in just a few seconds here, and I will share the results. Very, very interesting. All right. I think you can all see the results here that, 11% haven't started. We got beginners, totally great. We welcome you here. Of course, like the vast majority, 60% have invested in stocks and traditional ones, and the rest 22 in crypto. That's amazing. And 8% only in crypto. Love it. So that's really great to know who's in the room and how we can speak to you. We also have another question for you. And it's about the knowledge that you have about crypto. on a scale of 1 to 5, how knowledgeable do you feel about crypto right now? So, total noobs being 1, 5 being like, yeah, I'm in the crypto space. I'm following the news regularly. I'm investing and feeling really comfortable doing that. So, of course, this is a crypto for beginners event. So yeah, likely that we got a lot of newbies here. So I'm about to close the poll in a couple seconds. So get your answers in and let's see what we got here. A few more answers are coming in. All right, let's see. Wow, we got almost 50% are total newbies here to learn, open and curious minds. And then the rest kind of a gradual scale from that. Awesome, great to know. And the last question that we have for you. By the way, could you see that last poll results? I don't know, Zoom kind of, yeah, okay, thumbs up, perfect. All right, we got one more question for you. And this is about how are you feeling and your attitude about crypto right now? We had, I don't know if anyone's been paying attention, but even in the stock market and the crypto market, we've had an interesting end of the year and start of next. Or if you're just coming in new and you don't know anything, like how do you feel about it? Do you feel nervous? Are you excited? If you're not sure, you can feel free to put some comments in the chat about how you feel. It's really just great to know, what's the general sentiment around this. So we're going to close the poll in 3, 2, 1. Get your answers in. Here we go. All right. So we got a good mix, but I would say the highest percentage, 38%, is skeptical about crypto. And, for good reason, because it's hard to understand what it is. And often the new things, you're just kind of like, I wonder what that's about. So hopefully through this event here today, we can help illuminate what crypto is about and really address, how we are feeling about it and perhaps maybe even transform that feeling. So just a little word, Joy already spoke to this, but I wanted to congratulate you for being here because this group is largely made up of women here. But if you look at this diagram, most of the crypto events that I go to look very different than this. Usually I'm like that one single female in the room and the rest is men. And normally in the crypto space, about 10 to 15% of all crypto holders are women, which is very, very small. Even when I was first starting out years ago, it was 5%. So it's cool that it's growing, but it's still so small. And that's part of the mission why we're here and why we're inviting you here. So congratulations for being part of an early movement. We really welcome you here. So let's get into the actual content now. What we're going to do is really kind of take you through a zoomed out overview of what crypto is and some of the major components, and then get into the second half, which is more practical, getting into how do you invest in crypto from a practical standpoint. So we're going to start zoomed out though and talk about the beginning. In the beginning, I'm bringing you back to the evolution of money, just to kind of like put it into a framework of like where we've come from. It's quite amazing how back in the day we used to use currency as cattle or seashells, or in Virginia legal tender, tobacco was legal tender for a little while, and then we just progressed through using precious metals and coins, and then paper that was backed by precious metals like gold, and then separating from the gold standard where dollar bills no longer are represented by gold, more by the trust in the state, to having our money represented by plastic cards and smartphone devices, storing our value and our currencies, and that really led to the evolution of where we are now with cryptocurrency, with digital assets that really are assets and currency that are lying on a blockchain up in the cloud. And we'll get more into what the blockchain is, but just to put it into that framework, I love sharing this because it's just like, wow, look how far we've come and how fast we've come. But what is cryptocurrency? So this is a common definition that we find online: an internet-based currency and digital assets secured by cryptography and blockchain technology. And most people, when I say this definition to them, they have this look on their face. They're like, what did you just say? I don't get it. And that's, why we're here again, is to help break through that. So, we're in the midst of a shift today, and a big evolution. So let's figure out what this is all about. In simple terms, cryptocurrency is a digital form of money or value that lives on a secure network of computers. So this computer network itself is made up of many different computers all around the world. It's not housed in like one central place like a Google server. It's a computer network that really hosts a database of information. And so in this case with cryptocurrency, it's recording monetary transactions. So when people send and receive Bitcoin to one another, this runs on a ledger called a blockchain. And a ledger is literally just like a database list of transactions. It's quite simple, actually. And so you don't need to know like all the nuances and technicalities of how a blockchain works and what a cryptocurrency is to be able to use it. It's just like the internet, right? Do you know how the internet works? Can you explain that to your neighbor? Probably not, but do you utilize the internet every day and get a lot of value from it for your businesses, for your social life? Yes, you do. So cryptocurrency is like that too. You can interact with cryptocurrency without fully understanding all the technicals behind it. And so in terms of crypto, we do have Bitcoin as one of the major cryptocurrencies that are out there. It's probably the most famous because it's been around the longest. And I just like this picture because it shows a blockchain in like such a simple form. There's these blocks, they're connected. And what's in these blocks is that list of transactions that I was talking about of sending and receiving. So these little transactions get put into these little blocks of data and processed by a network of computers. And that's how Bitcoin runs across the blockchain. So when we look at crypto, though, it's way beyond just Bitcoin now. There's like over 5,000 cryptocurrencies out there, which is wild, many of which just exploded in recent years. Not all cryptocurrencies and blockchains are the same. I would say that there's a lot of nuances to it that are beyond this call, but I just wanted to highlight that there's a lot of different alternatives to Bitcoin out there, each with their own characteristics. But Bitcoin itself, it's good to look at a little bit of the origins to really understand what's behind this cryptocurrency movement. And the origin story is quite unique. So back in 2008, someone or a group of people under the pseudonym Satoshi Nakamoto, I know it sounds like a Japanese person, but it probably is not. Use this pseudonym to release into the wild this document that's pictured here, which is the Bitcoin white paper. It's a really cool document. It's only 8 pages long, and it's from the creator of Bitcoin saying what it's for and what it's about. And it names Bitcoin as a peer-to-peer electronic cash system. So that was kind of the original intent behind it. And this white paper circulated amongst a small group of probably the nerdiest people on the planet, and in some ways, the cypherpunks. And I know that sounds like some crazy sci-fi group like the cypherpunks, but if you can imagine, and there's a really cool YouTube documentary on this, just a bunch of guys who are coders, and they get together and talk about coding and using code to preserve our personal freedoms, using code as a means of activism, and using code to solve some of the biggest the problems that we face, or they feel that we face. And so this was like the birth of Bitcoin. And as Joy mentioned in the chat, Bitcoin just had its 13th birthday last month in January. And so it's come a long way from being, this really fringe topic that was only in these small circles of techie guys out to mainstream. And what's important here, though, is to realize what the philosophies and key characteristics and benefits crypto gives, especially Bitcoin. And to understand that, it's really important to know this concept of centralization and decentralization. So we're not going to go too in depth here, but I just want you to take away these keywords and put it into a framework where the centralized system we see here up at the top is what we're used to, right? We keep our money in a bank. They're an intermediary that holds our money for us. We use these other third parties like PayPal, Venmo, Western Union, et cetera, to be also intermediaries to transact and send our money across networks, right? And so this is centralized, though, because it's housed under different centralized parties who have control over our money. I don't know if anyone's ever had their PayPal account frozen or, you know, their bank, usually not in the US, but in other countries, like their bank accounts have been frozen. And so this is utilizing a centralized party to do it. And often because there's so many intermediaries, sending your money can be actually expensive. It can be slow. It can be controlled. Someone could block it. Whereas if it's decentralized, where, you know, for example, your value and your money, like Bitcoin, is hosted on a distributed network, which means a network of computers where there's no centralized control who can hit the off switch or control it. This is where it becomes peer-to-peer. So let's say I wanted to send some Bitcoin to Sarah directly. I would be able to send it from me to her without going through any intermediary at all. You know, whereas with the system that we're used to, the legacy financial system, if I wanted to send money to Sarah, I'd have to utilize either my bank or PayPal or some other party or multiple third parties. And so that's the big difference. And what's really backing this all are these key tenets and features where often, you know, if we're on a distributed network that's global, it's a global monetary network, it's beyond borders. It's beyond the censorship of nation states, governments, institutions, corporations. It gives you a sense of greater financial control over your money, over your value. And it often can have greater security depending on how that blockchain is created. And Bitcoin is a very secure blockchain because it's been battle tested for 13 years and has never been hacked. Whereas, you know, you see some other centralized parties get hacked, even like, you know, Equifax and our data, like there's hacks that are happening in centralized systems. So it can also be much lower cost to send value across a blockchain. So those are some of the key benefits and characteristics. I'd encourage you to, you know, deepen your knowledge over time and really get an understanding of that. But I just wanted to make sure that you understand some of the core philosophies and benefits, why people are getting excited about this kind of technology. Okay, so what makes up the crypto space? As I said, Bitcoin was one of the bigger and most well-known and oldest crypto out there, kind of the grandma or grandpa crypto. But then a lot of others have come into the picture. So like I mentioned, over 5,000. However, a lot of them are not very popular yet because they're so fringe and small. So this graph really shows kind of the makeup right now, and it's always changing on the daily. You know, 40% of all crypto that's out there is Bitcoin, right? And about 20% is Ethereum, and that's changed a lot in the recent years. So Ethereum is the second cryptocurrency that is like a very up and coming blockchain network that people are like, they call it the Internet of Value. So people are basically building a lot of things off the Ethereum blockchain, and that's why it's become very popular. The rest of this graph is made up of often what are called like Ethereum alternatives. And the way you classify that in a very simple way is just other blockchains that are saying, hey, we're better, we're faster, we're cheaper, you know, try us instead of Ethereum or instead of Bitcoin. And they're trying to offer different benefits. Of course, like the adoption is quite small if you compare it to what's out there. But it is. And I would also note that the other coins out of the rest, like Tether, USDT or USDC coin, is a stable coin, which means it's pegged to the US dollar. So there's a lot of popularity happening in the stable coin market too that you might see news about. one note is like the size. So now you know like kind of the distribution and the dominance of Bitcoin and Ethereum, but then the size. So the market cap that we have here today is $1.9 trillion is the total market cap, the amount of value that is in the crypto market, which is huge. Like it used to be even like back in the day when I was starting, like under 100 billion. So it's skyrocketed in recent years. And to put that into perspective, if you saw the news recently, Apple exceeded the $2 trillion market cap, and they're now actually, I just looked it up yesterday, it's at $2.8 trillion, Apple, which is wild. It's like one of the highest valued companies out there. But like, it's crazy that crypto, you know, it's small, but it's big. And so it just puts you into perspective, like the market cap of gold, for example, is 10 trillion. So it's like almost like 1/10 the size of it, which is kind of wild if you think about that. We got a lot of room to grow, which is why I want to tell you about the adoption curve. So this is a technology adoption curve. It really illustrates kind of like where we are. This happens across all different types of technologies, of course, but if you think about it in the crypto space, can anyone guess kind of where we are on this chart? If you want to type it into the chat. What happens, you know, in the beginning is we start with these like tech enthusiasts, these innovators, right? These are those cypherpunks who are in those little small circles. And then we kind of move into like the early adopters and the visionaries, the people who are like, oh, that's kind of interesting. It's a bit fringe, but I want to kind of experiment with it. And then there's like this huge gap between the next phases of things where you go into the early majority who are kind of more practical, pragmatic, and the late majority who are maybe skeptical and conservative, and then the laggards who may not ever get into it. So I see some guesses coming in. A lot of people are saying kind of early adopters, maybe we're in that gap, that big chasm or chasm. I always forget how to pronounce that word. But yeah, I would say, you know, no one really knows exactly because it's just a feeling, right? But it's early, it's super early. Only 2% of the world's population own crypto. 2%, that's it. And out of that, remember, 15%, 10 to 15% are women. So we're probably in this, you know, somewhere between early adopters and early majority. And so again, congratulations for being part of this conversation. We are early and you are potentially an early adopter. So that kind of puts it into perspective. Let's talk a little bit more about like price and performance. This Bitcoin chart is the lifespan of Bitcoin and where it's gone. And so you'll see like on the low end, it was like $145. It was even lower than that when it first got released. There's been 3 bull markets. So you see this little divot here in 2013, boop, the price like went up and down. And then we had these more recent bull markets here in 2017, the price going up to $20,000 per Bitcoin. And then dropping. And we went into like this phase here through 2018 to 2020 about which we called the crypto winter. It was pretty cold because the market went down and it stayed down for a while. And those, you know, early innovators and adopters were like, oh my God, is this thing gonna just go away? I don't know what's happening here. And then 2020 happened and all of a sudden pandemic economics pumped into the system and really like changed the way that we saw the world, the financial markets, and the financial markets really reacted to it, as well as like some pretty big, you know, changes that occurred that allowed like more people getting into the space, like more public awareness, companies getting in and buying crypto, even a country adopting it as legal tender, El Salvador. So like huge things occurred that like caused this price to go in the next bull market that we've been watching over 2020, 2021, where the price went up to 69,000 Bitcoin at an all-time high. So you see that it's been like absolutely astronomical growth. It's categorized as like the best performing asset of our time actually so far. And that's kind of wild. And of course, since the top, we've gone through some drop cycles as well. We'll see where it heads. Today it's at $44,000 per Bitcoin. And then Ethereum. How did Ethereum do? Well, if you look at charts, you'll see that Ethereum and the rest of the crypto market often echo what happens in Bitcoin. So, if there's ups and downs in Bitcoin, there is definitely ups and downs that often the charts like kind of mimic. And I would say that Ethereum this year had even more returns than Bitcoin. So, whereas Bitcoin is like kind of your steadier, like, I guess you could say blue chip might be a stretch, but it's more of like your larger cap blue chip. So is Ethereum, but it's also a little bit more new and room to grow. Ethereum was launched a lot later. It was launched in 2014, and it's had, a lot of adoption, but still like there's a long way to go, and they're still making improvements to the protocol. I see some questions in here kind of like, oh, are we earlier than we thought? Some questions saying, are we actually a little late? I would say we're still really early. Like if still like very small population of the world has crypto, and there's still a lot more opportunity for adoption to grow. Like there's just an enormous amount of space and a number of years ahead of us, and that's why we encourage people to get in early and long term, which we'll talk more about later. So in terms of returns, I love this graph because it kind of compares it. We got a lot of traditional investors here in the group, so most likely you're probably investing in the stock market or following the S&P 500, which tracks the overall stock market in the US. Maybe we got some gold bugs in here too. So yeah, just look at the difference in the comparison of returns. I know, like right now, like look at the 73 mark of Bitcoin, but look how high up it went, even this year, up to over 120% return in terms of the price swings and the ROI. Compared to the stock market, that's a huge difference, right? And even compared to gold, which kind of suffered through recent years, and so it's just people are paying attention to the space, and only recently now are institutional investors getting in on it. So that's also why it's still early, because usually with a lot of investments, the first people at the table are the institutional investors, are the big like family offices and hedge funds and things like that are investing. But with crypto, it's the opposite. Like the retail investors have been first in line actually to be able to get into crypto, and still it's so accessible. There's no closed doors that are blocking us from getting involved in this investment space. So I would just like to say that we're early, and yet there's still some signs that like adoption is here. University endowments are buying Bitcoin. Companies are now starting to put Bitcoin on their balance sheet, like companies like Tesla, MicroStrategy, even some like 100-year-old insurance companies are starting to put Bitcoin on their balance sheet, albeit small amounts. I mean, literally billions of dollars worth, of course, but small amounts in terms of their balance sheets. But they're getting into it, and there seems to be a trend that is starting to build. The last thing I want to say about the crypto space before we shift into the practicalities of investing is that you probably have heard about NFTs. Maybe you've heard the term metaverse, Web3. If you have, let me know. We'll actually do a quick poll. So get your answers ready. Oh, the poll's not pulling up on Zoom, but the question is, what's your experience with NFTs? Do you have an NFT? And are you interested in NFTs? Have you ever heard of it? Maybe you're just like, look, it's a trend. I don't think it's going to happen, or I have no idea what you're talking about. What are NFTs? So, I think we're going to have a huge mix because NFTs have really just gotten into the space, into our consciousness in the last like year and a half. And what they are a whole lot of things. I love the answers, by the way. You know, not interested to very interested. And we feel the same way. We're kind of just like, okay, what's happening here? You know, we all of a sudden we see celebrities coming into the space. You know, people are like, I'm going to NFT my dog or like, you know, who knows? So, you know, it also is super interesting to see where it's going. And these pictures here that I have are a type of NFT called a profile picture NFT. And, you know, what that is like, you can, you know, you can buy this Bored Ape or Mutant Ape or the cypherpunk and like utilize it as like, this is an asset, you know, and some of these are actually selling for huge amounts of money. In fact, in 2021, $17 billion have been invested in the NFT space, and they stand for non-fungible token, which probably doesn't mean anything to anyone, but it's basically, it's a representation of unique ownership of something. And NFTs can be these little pictures, but they can also be like audio files, real estate in the virtual land called the metaverse. It can be a fashion accessory or outfit you play in the gaming space. Like there's just so much there to explore. And
can I give a quick example for NFT? Yeah. In terms of being non-fungible, if you think about it as if, let's say I'm with Mel and I ask her, hey, Mel, do you have a $20 bill on you? And she's like, yeah. And I give her, exchange it for a $20 bill I have. She'd kind of be like, I don't get why you're doing this, but okay. Like it's a fair exchange, right? It has the same representation in both of our minds. Now, if I were to be like, hey, Mel, we both have the same, let's say we both have the same iPhone. I'm like, hey, Mel, let's swap iPhones. She's going to be like, hold up. Like, no, her iPhone contains things that are very unique to her and represent and has unique data, her photos and all this. And she'd be like, hell no, I don't care how close we are. That's not happening. It's a very unique piece. It's the same with non-fungible tokens. They're very unique. It's just to the owner, and there's not another exchange of the same value that you could, like someone else could own and have. I hope that helps a little bit.
Yeah, and I think, you know, this is just the beginning for the NFT space. There's a lot to explore here, way beyond, you know, the time we have here. But there's definitely, you know, groups I know even from the Southeast Asia, APAC people that are on this call. Like a lot of people are interacting in a Women in APAC group that Grace, who's on this call, started. And so like it's awesome to see the conversations that are happening here and the potential that might open up. So that's it, to kind of give you that overview of like, you know, what's the crypto space about, Bitcoin and ETH as like, you know, the big dominant players, and now seeing NFTs in the metaverse, like this is opening up a whole new thing. So where it used to be a lot about like internet of value and money systems and disrupting the financial system, the NFT space is like bringing in the culture creators, the artists. Like it's so interesting to see now the crypto space is having a whole new wave of a type of audience that are coming in. And so it's super cool to witness. All right, so we're going to shift gears. Joy, are you ready to talk about investing in crypto and how to do it responsibly? Yeah. Awesome.
One caveat, I'm recovering from a cold, so hopefully I get through these and don't lose my voice. Mel may take over if needed. One thing before we start on this that I want to point out, because there's a lot of questions like, is it too late? In this session today, we're not covering all the use cases, applications of crypto. That's something we do further in workshops, but be aware that beyond just investing to make money, there are so many applications. And one that I want to highlight, for example, is from the financial inclusion perspective. You know, there's 7.5 billion people on this earth, and 4 billion are significantly underbanked. 2.5 billion are completely unbanked. So they have not been served by the traditional financial sector. It has failed them. That was the space I was working in before and helping them become banked. And crypto presents to them, for example, a way to become their own banks and to have it be more accessible. So there is a vast opportunity for adoption and helping people in areas where traditional banking has failed them to get on board and to be able to grow their wealth. So really excited about that. If you want to learn about all the different applications, you can check out our workshops. So let's get into now investing. And before the how, we want to talk about how to be responsible investing in this space. So you showed up here today. That's a great step for investing in yourself. Knowledge is power. That is so important. And with that knowledge, you're able to better assess opportunities and understand how to do your own research. You'll see that term a lot, but people just use the acronym DYOR. That's what it stands for. Don't take others people's words necessarily like hearsay on the street for granted. You need to do your own research and have a good comprehension of the risks. This is an emerging asset class. And while I'll say it's very different today than if you were involved in, let's say, 2015, it's still, there's a lot of risk with it being a new asset class. Although today it is a lot easier. 2017, for example, it was very hard to even buy crypto if you wanted to. Today, Robinhood, PayPal, Venmo, all these institutional players are getting on board. There's also, a lot of gray area around the regulation, a lot of talks in place. So we're waiting to see how that all pans out. And there's also not traditional consumer protection that, for example, your savings account in the US is FDIC insured. That's not necessarily available. We are seeing it with some private crypto placements. If you have higher amounts, companies that are offering insurance now. If that's something you're ever interested in, contact us. We have a couple trusted partners that we work with for dealing with higher amounts for higher net worth individuals. So we're excited to see that starting to come forward. And it's a lot of personal responsibility, especially if you custody your own assets, which we don't talk about today, but it's like being like your own bank. And most importantly, don't invest what you can't afford to lose. If you're taking money that you're going to need, let's say within the next year to pay for an important expenditure, don't invest it in crypto. You don't know where the market is going to be at the time that you need the money. And certainly we're not advocates. We don't condone leveraging. There's people that are out there, not just in crypto, but in other investments like mortgaging their home and taking out lines of credits. Like, nope, we do not condone that kind of activity. And it's as you get into crypto, you'll start getting an understanding of the market and getting more comfortable with the volatility that comes with it, for example. But that takes time to get to know the trends. And if you are starting out with just money, you can afford to lose, there's less emotions getting into it. Next slide, Ma. One thing we want to address, and I'm sure this is on a lot of your minds, are the scams and people that are preying on ignorance in the space. And again, a reminder, with any investment asset class, there are scammers, and there are a lot of people out there that are playing on the get rich quick mentality. I do want to emphasize that Bitcoin itself is like not a scam. And the top cryptocurrencies, for the most part, there are cryptocurrencies out there that are tokens that are introducing themselves that in beginning stages that may be, but Bitcoin itself is not a scam. And the reason why there are so many scammers out there is they see the value in Bitcoin. With all the new money going into it, it's attracting a lot of attention, and they know there's a lot of newbies, and they're using a lot of the same old tactics that they have used in other asset classes for scamming. For example, in 2020, Twitter got hacked, and it was the largest Twitter hack in history. And they took over 100 accounts, including like Elon Musk, Obama. And so these were reputable profiles they're posting from. And they sent out, you can see the message on here, messages to people asking them to send them money and that they would double it back. And people fell for it. And I think, you be skeptical of anything. Again, get rich, these giveaway scams. If there's a disproportional giveaway, it's not going to be legit. Like, anyone that's asking you to send X amount of Bitcoin and that you'll receive back 2 or 3 times that. And you will see these kind of giveaways being promoted even across popular platforms like YouTube, Twitter, there will be advertisements because they're not vetting everything fast enough. So we just stay away from anything like that. There's also Ponzi schemes, work exchange mining, where they'll try to get people who want to work from home and saying you can mine and get 10 times the amount that you put in. Just don't trust anyone claiming that they will give or help you mine Bitcoin. And if you are getting emails, receiving crypto related, congratulating you on winning Bitcoin, again, stay far away. Next slide, Mel. So how to protect yourself. DYOR, again, that comes up. And in general, if something's too good to be true, it generally is. No one is going to give you free Bitcoin. Now, there are signups with reputable exchanges where they'll be like, sign up and you get $10 of Bitcoin. That's different. And if something, one of the biggest scams is phishing. And just like Amazon and eBay experience this a lot, getting emails asking you to change password or log in. So one thing that I recommend doing, that I personally do, is I bookmark the exchanges like I work with and use those links directly rather than using like links they send me in an email, because it may appear to be them and it could be an impersonator. There's just too many savvy people these days that can impersonate accounts. So, and never under any circumstances, give people your private keys. We're not going to get into that, but if when you do own crypto, you're going to get a set of keys, you do not hand over your keys. You can hand over, you share your public address for real transactions, but not your keys. You guard those with your life. So with this understanding and how to protect yourself, let's get into how to actually get perhaps your first exposure to crypto. Mel, can you switch? Thank you. So the easiest way to get started is through an online exchange. This is centralized. You will go through a KYC, which is a know your client process. So don't be surprised if they ask for your license or passport for verification. And when you go through the security procedures, you'll have the option to go through an SMS verification or Google Authenticator. We highly recommend using the Google Authenticator option. That is the most secure. There are two exchanges that we've personally used and recommend, Coinbase and Swan. Coinbase is the OG. You probably heard a lot about them because they had an IPO last year. And Swan, we really like the creators behind them. They make it very easy to dollar cost average in. One limitation with Swan is that they only allowed you to invest in Bitcoin. And so if you're looking to get into others, Coinbase might be a better option. Swan definitely has the lowest fees though on the market. And
Hey, Joy,
I want to acknowledge that each country has, sorry.
Oh, I just want to acknowledge someone in the chat, Sheila, had a experience with Coinbase and, with a SIM card attack. And yeah, that's unfortunate. And also the customer service aspect of Coinbase. And it's not just Coinbase though, sadly, a lot of the exchanges are really overwhelmed with such growth that their customer service is definitely lacking. And these are top exchanges. Joy and I both consulted at a top tier exchange, and they definitely had a backlog on customer service too. So sadly, it's across the space, but there are ways to protect yourself without storing all of your assets on these exchanges. We get into that in detail in our crypto storage workshop.
Mm-hmm. And if you're joining from another country, and Coinbase does operate in a lot of countries, but if they're not optimal, sometimes their fees are super high. Each country does have its own exchange. And there's, if you're in Indonesia, we have a lot of people from Bali, Indodax. You're in Singapore, Gemini, CoinHackle. There's many options. If you have questions, feel free to ping us offline another time and we can help direct you. So when you get your first, exposure to this and you want to set up an investment strategy, we highly recommend having a dollar cost averaging approach. And this investment strategy is not unique to crypto. It's something you can do with traditional equities, the stock market, and pretty much all long-term holders do this. And what you're doing is you are setting up an auto buy and you're buying in regular increments over time. So you take a look at your budget, you decide, and your portfolio, of course, and what percentage of your portfolio you want to be dedicated to crypto. And you set aside a percentage of money each week or month to go into crypto, whatever fits your budget. And the idea of this is you're able to kind of set it and forget it, and you ride the volatility up and down. And over the long term, are able to benefit from long-term advantage rather than trying to time and play the market. And covering some of the benefits of that further, I think I've got it here, but how many of us, had wished we'd gone in at some point in the, if we don't have it auto, like we're like, shoot, I missed this opportunity to buy the dip. And this allows you to ensure it's just on a regular basis. And it's very difficult to time the market. If you look at historicals and studies that have been done, those on average that are longer term holders outperform those that have tried to time the market. And that the same applies to stocks and to crypto. And next slide, as I mentioned, investing for the long term is what we recommend for the majority of our community, as opposed to actively trading. If you believe in the use case for crypto and want a certain level of exposure, setting up a dollar cost averaging and having a longer term time horizon, let's say like 10 years, and being a, what we call in the crypto community, a hodler. HODL stands for hold on for dear life. There's a fun story behind that. Someone had a little too much to drink at one point. The Twitter community is very active around crypto and accidentally misspelled. He meant to say I'm holding, like when the market was crashing, and he spelled it HODL, and everyone caught on to it. And now it's an actual term. So when you see that, you know what it means. And a lot of people, when they think of long-term holding, they may think of the first image is that up here, oh, I'll just, ride along the market. The reality of holding, especially in hodling in the crypto, is it looks a lot more like this, and it can feel really terrifying at points, but it's still the same kind of trajectory in the long run. And you've probably seen that the cryptocurrency community loves memes. So there's a lot of HODL memes. Now you know what this is, and this is what it feels like sometimes to HODL. So let's recap now with best practices. It is really, really important. I can't emphasize this enough. Going into any asset class, to understand your total net worth in your portfolio. We can share a link in the chat to a tool that we have for doing that, and to really evaluate how much risk you want to take with this asset class. There is a general rule of thumb, especially amongst newbies, to not put in more than 5% of your portfolio. This, of course, will change as you enter the market, and you can decide for yourself what your risk appetite is. And we have people now, like younger people coming into the community, like, I want to go all in. And yes, we are big believers in crypto, but we do not condone that. We believe it's really important to be well diversified. That's just a general best practice investment strategy. And we also think it's really important to be ready to buy. So even if you're not ready to buy today, get set up on one of these exchanges so that, let's say, especially if there's a price drop, you're already ready to make that purchase, because sometimes it can take time. There may be some quirks, or you may have to prove some additional verification. So it's not a bad idea just to be prepared to have the structure for that. And something that we like to do is to kind of think through the different maybe cryptos that we have and be like, okay, I'm keen on getting some more Bitcoin or Polkadot at this price. And so I'll write it down and be like, if it goes to this price, I plan on getting this much, and I'll be happy with it, even if it goes lower. And setting that up so I can big lump sum purchases, even though I'm dollar cost averaging normally, there will be hey, if it goes to this point, I want to buy in more. And it's good to stick with that rather than ride with emotions. There's a saying in the Bitcoin community of stay humble, stack sats. Sats are the lowest denominator in the Bitcoin, and to not get greedy and to stick with your plan and just over time slowly, stack your sats. HODL, that's our long-term recommendation. and to keep learning on your journey. That's the most important thing. And so Mel's going to dive into a little bit more about what that looks like with INVESTERA.
Awesome. So yeah, I mean, we've just taken you on a big journey. I know that, we gave you a whole overview of kind of the zoomed out crypto space. And now we're talking about, investment strategies and approaches and mindsets and, what dollar cost averaging is in terms of, putting in small reoccurring buys that you automate so you can set it and forget it and dollar cost average in. It's a very reliable investment strategy that is really demonstrated in the traditional investing world that can translate into the crypto world. And so with that, you kind of have, this little snapshot that you've gotten of, what it is, how you can get involved, do it responsibly, some best practice guidelines. But I will say there's still a lot more to learn, right? This is just a quick session. That's an intro session. We dive deeper into this through a lot of our different offerings. And we're excited to announce to you that INVESTERA is launching a founding membership opportunity. So we are a membership platform. We're launching in March. And the whole idea behind it is to create a safe space for people to learn and people to be able to expand their financial intelligence and knowledge and move along on their journey towards financial well-being and financial independence. We believe strongly that getting knowledge helps you to make better decisions. It gives you more peace of mind. It's less stressful, and doing it in a community that helps you, that shares their experiences, is a huge benefit that we've seen. And so we're creating a space and an experience for that, where we're going to be hosting 2 events a month where, we dive deeper into crypto, covering like what are the latest updates, headlines, also, what are some specific areas of crypto that you can get involved in, and bringing in speakers around that. But then also the other event is just generally on building your wealth and how to do that, how to manage your finance, looking at a diversified portfolio, not just in crypto. What does the rest look like to build your way towards financial freedom? And so we're offering a new special. It's kind of like this no-brainer amount of like $100 for 6 months to have access to all these different events, tools, resources. We also have investment opportunities that we've vetted with partners and service providers that we can help educate on, totally optional in terms of like what you're interested in. But we just love to show, things that are not scams, things that are legit, reliable experiences for people to get involved in. So if you want more information on that, you can check out our website. It's, investera.io, that's listed here. We're welcoming in the first 100 people will get a free one-on-one session with INVESTERA to really dive deeper into their own personal finances and investing questions to really help kickstart your journey there. So we hope you join us. I know a lot of you have been with us, some new, just meeting us today, but a lot of the attendees also have been with us over the last year attending our events and workshops. So we're open now, and we hope to see you there. And in terms of staying in touch, we'd love to, actually, we don't have our Zoom poll right now for feedback, but we'd love to see you on Instagram. We'd love to hear via email if you have any questions that come up regarding the membership or regarding anything that we shared today on the call. And we send out a newsletter every week, a free newsletter, talking about some of the major headlines that we see that are important to know, some resources, some invitations to events, all that kind of stuff. So yeah, please join us. We'd love to stay in touch with you. We super appreciate the time you took this morning and this evening, wherever you are in the world, to come and learn together and share things. So we're gonna go into a question and answer, but we just wanted to wrap up with that and say thank you. And we look forward to hearing your questions and going through some of that.
Hey, so I saw, yes, thank you everyone for tuning in. And I saw a question about taxes. Is it similar to with stocks? Yes, you are taxed on your gains. And when you make certain transactions. So if you do, for example, you can exchange like Bitcoin into ETH or vice versa. That's also considered to be a transaction because you're having to sell one in order to purchase the other. I know a lot of newbies think, oh, I can just move things around between cryptos without taxes. Anything that's like a sale where there's gains involved will be taxed like it is with stocks.
And that's specifically for the US. So, if you're tuning in from a place like Singapore, lucky you, because it's not taxed in Singapore. There's actually no capital gains tax on crypto in Singapore and no tax on trades, which is a beautiful thing. And you Singaporeans should take advantage of that. What other question? Oh, sorry.
Is one of the things that came up that I think will kind of link this back to some of the topics we've talked about in the Austin Women's Investing Group. I know I saw at least one question about people being able to invest in different products in their IRAs or self-directed IRAs. Do you guys have any insight as to kind of the account in which you can hold digital assets or cryptocurrency?
Yes, so that is, I would say, forming. That's a newer development now, that option. There are companies out there like Alto IRA, I will write that down now, that are offering this service and allowing you to place part of your IRA or all of it into crypto and really let you like ride it out over the long term.
Yeah, it's definitely a new emerging thing, but it's definitely something that is a lot of interest to U.S. crypto investors. Being able to buy it in a tax benefit retirement account.
Yeah, and just one of the things, I'm just going to piggyback really quick. I just saw a question about, there's the coins themselves, which sort of the analogy is, maybe investing in individual stocks. Right. And then in the US, they're starting to develop products, exchange traded products that are kind of similar or on their way to being similar to like an index fund or something like that, like an ETF or a fund that a retail investor, like most people on this call, can invest in. So like right off the top of my head, there's the Grayscale Bitcoin Trust, GBTC. There's some products from Bitwise, BITW is one crypto index fund. There are a handful of other ones out there. And that's just kind of starting in the US. I know there's lots of other countries that are farther ahead with exchange traded products, but I think that for a lot of the people on this call who maybe are waiting for products that they can pretty easily put into a Roth IRA or a brokerage account, those don't totally really exist yet, but are maybe on the way.
Yeah. I'm so glad you brought that up because, in the US, people have been, these institutions that want to offer these, crypto ETFs, they've been applying to the SEC since 2014. Like they've been putting in applications, some of the largest institutions, Fidelity included, and have been shot down by the SEC. Whereas in Canada, there's like already multi-billion-dollar ETF funds that have been created in recent years and are really popular. Some of them US investors can access. However, like what we really want to encourage, and those are fine, but what we really want to encourage is having your opportunity now to invest directly in the underlying asset is a very special moment. And it's also like a huge part of the learning curve experience to get into the space. And so there's a lot more complications when you like start to go into like the financialization and the productization of crypto, the underlying asset, into an ETF, whether it's a spot ETF or a futures ETF. There's something that is inherently like a bit of a different feel, right? Than investing in the direct underlying asset. However, we do see some really interesting funds and index funds that are coming up into the space that I think will really benefit retail investors who may not have the appetite to get directly involved and want exposure across, they're used to this index investing and ETF investing, and that will appeal to them. And I think if that happens too, like that could push adoption forward in a huge way.
Well, I'm curious to hear more, Mel, from you and Joy about kind of the whys behind that. I mean, because I come at it from like the opposite view, where like an indexed exchange traded product would open the door to cryptocurrency in a way where people don't have to learn the intricacies of each coin and be up to date on the market. It's probably pretty intuitive for people who are already used to an index fund from Vanguard or something like that. So I'm curious to hear why you take the opposite view.
Yeah, I would say my personal view is there's no like right or wrong. It all depends on the investor profile. And what I care about is people getting into this space, like while it's still early days. So whether that's through an ETF or directly owning the underlying asset, we do want people to play a little bit with the technology. We recommend that to getting to know what it's like to have that experience of directly acquiring and owning it and having it. And it's a whole new experience compared to traditional banking. I would say with like, I saw someone asked about like Bitwise, you mentioned Grayscale, look at the fees too, because you are going to more likely pay a higher fee and they maybe even be taking a monthly management or yearly management fee. Whereas you hold the assets yourself, you just pay the one-time upfront fee for the acquisition of it, which may just be like 1%. But if there's like a company that's charging you, let's say 1% a month, I would question that a little bit. Again, depends on what services they're offering. If that includes insurance, that's a whole nother story, right? So it depends on each investor profile. I hope that helps a little bit. If someone's like nervous about owning it themselves, then great, try it maybe with an ETF. There are some ETFs that allow you to own have exposure to the underlying asset, but many of them, someone also brought up futures. It's just playing on the potential future price, just like futures and stocks of what Bitcoin could be. Again, you're not getting the actual assets itself.
Yeah. And I see Leora just wrote, the difference between investing to make money off of it versus utilizing it like as like in a practical way. And like, I would say that that's like an accurate highlight of like, a fund is like you're distant from the actual technology. And so if you want to be a person that is, stepping into being part of Web3 and the future of finance and being able to transact, interact, participate, then holding the direct underlying asset and actually using it as well. Like, so maybe there's like a portion that you hold and then there's a portion that you utilize on these different blockchains, utilizing these different applications. That's a lot different than having it in a ETF, right? Or a fund. Yeah.
That's a great point.
Thanks for raising that, Leora.
There was also a question about regulation. What I want to touch on, there's a lot of hype as always in headlines, and they love to cover when the market's crashing, like a lot of hype around that. When it's going up, they'll cover, the media will cover all the new millionaires in crypto. So we always say, take a step back, be a little skeptical. There's going to be tons of headlines around regulation. And my personal viewpoint is there are those in like the US, for example, that are trying to make crypto legal. There are also those that understand that the US cannot fall behind on this. Like, this is not a matter of if it's going to stay, it's here to stay. The world is moving. We're seeing countries adopting Bitcoin as legal tender. There's more to follow. El Salvador was last year. And what you'll see in the headlines right now is Treasury is talking about the USA Competes Act. And on a high level, they would try to ban like crypto transactions that are associated like with money laundering. And so there's a lot of different nuances in terms of what that could look like. It kind of makes me think about prohibition. That didn't work out too well. And so there's plenty of advocates within even the SEC, like Hester Pierce, she's amazing, that say the US should not, stifle innovation, and that actually, blockchain can bring a lot more transparency. It's visible. Cash is not, so why aren't we banning cash? And in terms of, am I worried like how this will affect cryptocurrencies in the long term? Look, they can't control decentralized exchanges. We didn't cover that today. There's centralized and decentralized, which will often be referred to as DEX. And in the US at one point, last year, decentralized exchanges were doing more volume than the top crypto centralized exchange. So you don't You don't need all the regulatory tape to use Uniswap. That's one of the decentralized exchanges. All you need is cell phone and internet service. And so the USA can either get behind or they're going to be left behind. And I think there's that realization. Of course, there's people who are, fearful what this means potentially for US dollar, and so are fighting this. But to get to us, this is not an either or. Like, there's going to be a bridge for a long time in our lifetime as we make these shifts with the new paradigm. And I'm losing my voice.
And so to add on to that, a little bit of tangent, someone wanted to plus one a question about, like, are governments establishing their own digital currencies and how is that going to affect crypto? And I think this is an important distinction, because not all crypto is the same, right? Not all digital currency is the same. So in a sense, there's almost like a race for currency. There's like a currency war, a currency race that's happening. There's the decentralized ones like Bitcoin and Ethereum and the rest. And then there's like the centralized ones that are like going to be government established. They call them CBDCs, central bank digital currencies. So the governments are also trying to say, okay, we see this digital transformation happening. How do we get on board with that? And then there's also other cryptocurrencies like big tech coins. So maybe some of you have heard about Facebook's project that they now dropped and sold for Diem or Libra, and they were going to create their own cryptocurrency on that platform. So like there's this like, and Facebook, the number of users is like bigger than any nation state, right? And so it would actually almost be a more potentially widely adopted currency than a digital currency coming from a nation state. And so there's this interesting like race for who's gonna, and it's probably not gonna be one that wins, right? There's different use cases, how it will be, who will adopt it, how it will be used. And there's probably, a lot of, parallel systems that we're going to be seeing coming. And that's why it's important for us to learn how to have like a discerning eye and understand what are the costs and benefits in terms of privacy, in terms of control, in terms of ease of use. There's a lot of things to think about there, and not to overwhelm, but I just, I find it to be fascinating to follow that story, and see how our world of money is evolving, because it's going to impact us all, and it is. What other questions should we cover? All right, we have a lot of questions about mining and the environment. Yeah, that's a really important topic, and having a lot of changes in recent years too. So if you don't know what mining is basically the name for creating cryptocurrencies. So, in the same way that central banks can create money and inject it into the system, as we've seen, especially during these pandemic years, like the central bank printed a lot of money and injected it into the system. Blockchain protocols that are money systems create new money and inject it into the system. And this is called mining. And so each blockchain has its own kind of way of creating new currency to come into the system, and different policy around that. So the most well-known mining is with Bitcoin mining, of course. You've probably seen in headlines, there's like a whole debate around the energy use of Bitcoin and the mining procedure that happens there. And the mining with Bitcoin is, it's called proof of work, which means these computers have to prove that they did work to solve a computer formula, a computer program, to then win that bid to be able to issue new Bitcoin into the system. I know that sounds a little bit abstract and crazy, but that's how Bitcoin is created. And it's done on a regular, it's monitored by code. It's regular. No one can tamper with it. No one can decide, hey, let's print like $3 trillion today. So there's, a whole like system that helps regulate that and keeps Bitcoin being a deflationary currency, actually. And that's why a lot of people see Bitcoin as an inflation hedge. That's another side note. But mining, takes resources, and a big resource is not only the computer gear, but also the energy it takes to run that computer gear. And that's the cost of maintaining this new global monetary system. There's a lot of contention being like, okay, well, it only actually takes a small percentage of global energy to run this new financial system. And when you compare it to our existing system of banks, that run the US dollar, all the energy that it takes to do that, to issue that, and the monetary policy, in comparison, it's very small. There's also debates around it. There's a whole new shift in mining. So what used to be, for a lot of Bitcoin's lifetime, mining that would happen in countries like China, because they would take advantage of very cheap energy, hydroelectric power. China in the last year has banned crypto mining, and all the miners have moved out of China, which is like, they call it the Great Mining Migration. It's like never been seen before. And they've moved out of China, and a lot of them have actually established themselves in the US and other countries. But Texas is now becoming a huge crypto mining hub, actually. And what's really cool there is the level of transparency is so much more than what was going on in other countries. And they have the North American Mining Council, and they're meeting, and they're saying, how can we really collaborate with the electrical grid to utilize renewable energies and prop up the renewable energy sector by having the demand. And how can we look at energy usage, like for example, in Texas, when there's actually an energy crisis sometimes that occurs and shortages, how can we work with the miners to be like, okay, depending on what supply of the energy is, how can we shut off the miners and give it a break? And actually, so there's a lot of collaboration and cooperation that's happening that I've never seen before. And I find that it's pretty amazing. Yeah.
Being in Austin, I was pretty skeptical that would happen last week, but it did, right? The 5 biggest miners that are set up wherever they are in Texas powered down when they knew that there was going to be a lot of power being pulled from the grid. So that happened once. I was skeptical and saw that it did in fact happen, but it is really interesting and definitely like more of a nuanced discussion and debate than I think that I'd been anticipating.
Yeah, that's so cool that you actually witnessed that. Like, I think what's going on in Texas is really super interesting on the crypto space. There's certain states in the US that are like really adopting crypto and creating, regulations. Even Arizona just filed for legal tender of Bitcoin in their state. Florida, Texas, Wyoming, like all these really cool things are happening.
Austin could be the next home for INVESTERA.
Possibly.
Maybe.
We're like considering it.
I mean, Austin and Miami, they're getting a lot more crypto friendly. Mayor of Miami is so friendly. Someone asked about like ethic groups or organizations on this very topic of environment. There was a mining council that formed with some pretty big names like Michael Saylor, Elon Musk, the head of Marathon Digital Holdings, which I believe is the largest mining company in the US. And they created this forum for pretty much anyone, but it's especially miners, to come and learn, educate each other, regulators, and publishing commitments. Marathon, which again is the largest in the US, they committed that their miner fleet will be completely carbon neutral by, I think it's end of this year. So there's some good things going on in the space to create accountability. And what's beautiful, I think, is that these discussions are happening. They didn't happen with traditional finance way back when it was first being formed. That was limited to a small group of people. And now a lot of people can contribute to these discussions and be like, hey, I have concerns around this. What are you doing? And so we also think it's important to vocalize as investors what your concerns and what your needs are. For example, we're part of a group of female leaders in the digital asset space that's looking at putting forward a index fund for crypto, to believe it or not, because we care about more people getting into the space that's looking at the environment, which tokens are most mindful of that, and also at diversity and equity. And we would be creating a whole scoring system for that because it doesn't exist right now. But that's very early days, but that's us as leaders putting forward our desires too. And we don't know if the proposal is going to get approved, but we're doing that.
Yeah. Yeah, it's like you said, Sarah, it's a very nuanced conversation, the energy one. I would suggest there's a researcher and thought leader named Nick Carter who's done extensive research out of Cambridge on Bitcoin energy topics. Nick Carter, he also like speaks to governors and mayors on the topic, and he's just so well researched. And so it really helps to like not look at the hypey headlines in the media of like Bitcoin consumes as much as XYZ country, to like actually look at, you know, what are like the practical views, arguments, considerations, and get into that. Super interesting stuff he shares.
And
so
one, I know we're wrapping up, but I just want to clarify with Sheila. So new Bitcoin is not being created. What's being constantly done is verification of transactions. There's maximum 21 million Bitcoin, which makes it a good hedge for inflation. It can't just be produced like the US dollar with quantitative easing.
Yeah, so basically like there is a finite amount of Bitcoin, 21 million, but it's time released. And so there's a release schedule that the mining basically maintains that release and injects this Bitcoin into the system, and no one can tamper with that. And it is deflationary because the rewards that miners get for processing those transactions, solving that problem, and doing the service to the network, the reward they get decreases over time as well. And so it reduces the supply over time of Bitcoin into the system, and it is finite. And so that sense of scarcity comes into play, and that scarcity very much drives value. Along with, if you have scarcity and lowering supply along with rising demand, that's where the price moves. Cool. So I just want to time check. How are we doing?
I think that we're at about time. It's 6:57. I would, those of you who did not get your email answered, could you guys click back to the slide with your contact info on it?
Yeah, absolutely.
Certainly, like, you can reach out to the Austin Women's Investing Group and we can connect you with Mel and Joy. You guys can connect with them directly. But this has been like an amazing first step, I think, for the people in Austin Women's Investing Group to have you guys come in. And so I just really want to say thank you for, you know, uniting from across the globe to make this happen on a Wednesday night, at least in Austin. I know that there's so much feedback in the chat box for you guys doing this and putting this together and presenting it to our group. So I hope in the future we can do it again. You know, we love supporting you guys and what you're doing, and know you've been super supportive of what we're doing at the Austin Women's Investing Group. So I just really want to say thank you from the bottom of my heart. And certainly, like, I encourage all of you who are interested in this space, do some of INVESTERA's educational opportunities, like their webinars, their courses, their workshop. I mean, because they're top notch and they just are here to get you the information you need to make a choice, right? Regardless of what the choice is, like yes, no, maybe. It's all just information gathering and doing the best we can to make decisions going forward.
Thank you, Sarah. That means a lot. We love the Austin Women's Investing Group.
Thanks.
Yeah.
And yeah, really appreciate everybody's time that they've taken to come here. I know there was a lot of questions. I loved the quality of questions was amazing, like really astounding. And we'll definitely look back at those questions and develop content around that as well to help support those questions. You know, like we often look at those and we're like, okay, how can we write a blog post on this? How can we, you know, form another event or workshop? There's, you know, hearing from you shows us what you're interested in, and we really appreciate that. And we want to be able to help and support you. Perfect.
All right. Well, I think on that note, everyone enjoy your morning or your evening or, you know, whatever time zone you're in. And please let us know if you need anything going forward.
All right. Take care. Bye-bye.
See you later.
You.